Uh, This morning, or this afternoon, I should say, welcome to this afternoon, I'm going to talk a little bit about the aromatic side of the equation. We're going to hear a lot this afternoon about the C2s and C3s, the ethylene and the propylene side, which do impact the engineered resin space. But as we talk feedstocks, we're going to talk about those that are a little more unique to the aromatic side of the chain, which includes benzene, styrene monomer, butadiene, as well as caprolactam. And the, as Sam said, the resins we'll cover are the four listed there. When we look at basic chemicals flow, we start with the olefins plant, also commonly known as the crackers. And as we heard in an earlier presentation, the output of aromatics, benzene in particular, but also butadiene, has been reduced by the fact that we're using light feeds, ethane-based feeds, which are more economical, but also result in less production of benzene and butadiene and greater production of ethylene. So the output, the supply of these aromatics has been adversely affected by the increased use of ethane. The last two blocks on the left side are the refinery side of the equation. And first we have is the cat cracker, breaking apart some of those larger molecules from the oil that's provided to that facility, and that has also seen some reductions in terms of aromatics output because of the lighter oils that also come from the shale formations reaching the refineries. And lastly, we have the refinery cat reformer, which actually rebuilds some of these broken up molecules into more valuable fractions like benzene, and that's very critical to our supply of benzene as well. As we talk about the four building blocks, we have these four materials all contribute to the production of the various engineered materials, with benzene and butadiene supplying the nylon 6,6 feedstocks, at least through one process, the alternate process, benzene and propylene based. We have nylon 6, largely derived from benzene, and then ABS is the most complex of the three, taking in a number of different feedstocks. So we'll go through those as we review those resins. But to focus on benzene, we'll look at several issues affecting benzene, and we'll start with price trends. We've had a lot of volatility with a very high spike in terms of benzene contract price in the month of July. That was driven by the fact that we had a lot of outages in the springtime that were either unplanned or extended beyond their scheduled time frame, that yielded a reduction in supply. We also had prices already falling before that point that cut off the arbitrage of imports from Asia. So the resulting decrease in supply did bump up the cost of material significantly and reconnected it with oil, if you will. If you look at the lower graph, you can see that on a couple of occasions we have had significant disconnect with oil, and that's always been driven by supply and demand imbalance. When you do look at benzene production, the largest single source is the reformate from the refinery reformer from naphtha, so about 50% of benzene is derived from that process. The cracker, 23% and falling, and then we have the on-purpose side of the equation, which is generally derived from toluene using several processes. We pretty much consume what we make, and we import significant quantities. You can see one factor that's contributed to volatility in that lower bar chart is a decreasing inventory base of benzene. So when we're oversupplied, when the tanks are full, you will see a downward effect, but when the tanks are light, that's going to certainly throw volatility around. When you look at the trade flows, we've had a lot of building in Asia in terms of the aromatics plants in recent years, and that provides a lot of excess, particularly when things are growing more slowly over in the Asian region, and they have excess material to sell. It is a globally traded commodity. We don't just get our benzene from Asia, we also get it from Europe. Europe does produce a lot of its ethylene from naphtha through heavy crackers, and as a result, there's a greater proportion of benzene output in that region. So that also provides us with imported benzene. As far as end uses, we have to be very cognizant, and this reflects what Sam was saying about the many drivers and the many moving parts in this business. We also have to keep an eye on what the demand side looks like for benzene as well. And key and number one to that is styrene monomer. That's the biggest user of benzene. And we have had some very good markets for styrene export in recent years, and that has driven strong demand in that direction. The second biggest use is for cumene, which ends up in polycarbonate, but also into construction materials. So the construction markets are very important to benzene use as well. And then we have a much smaller proportion that gets used for nylons. At this point, I'm going to turn over to Robin for its discussion on styrene.
Hi, I asked Mark to stay nearby because being from New York, I've been told having an interpreter handy is generally useful. My role normally is I work directly with the client on a day-to-day basis in the trenches. So I'm generally not up here in front. So if I pass out from sheer panic, mouth not necessary, I'll be fine in a minute. I'm going to start off with styrene monomer. I'm going to lead into butadiene, which is going to be the components that really affect polystyrene. Then I'm going to address caprolactam that leads into nylon. Starting with styrene, there's a number of drivers which do affect the styrene monomer price. One is supply and demand. Another one is global prices. But the two key drivers would be your benzene price and styrene monomer exports. The graph on the bottom, it does really trend pretty closely with the benzene price. We did have a little bit of a disconnect around the September, October of 2013 timeframe. That's when the supply-demand factor came in play. Our supply was better, our demand was down. That's because we came off of some very high prices during that year. So the supply and demand factor kind of offset the little jump that you see there in benzene. But for 2014, you pretty much see it's a mirror image of each other. So the benzene is a pretty big factor in how our styrene monomer prices move. The other key factor is styrene monomer exports. The US generally exports 43% of its production. Now think about that. 43% of production is taken out of the North American supply stream and it went offshore. So that creates a little bit of a tight scenario that we keep hearing about in the market. Keep hearing styrene monomer is tight. When you're exporting 43%, you're very vulnerable then to unplanned outages and even planned outages. Right now, the arbitrage is open. Europe had a big jump in styrene monomer of almost $200 a metric ton, and that's because they had a major unit go out in the Netherlands that took out 20% of its capacity for that region. So that global factor came into play here. Our styrene monomer spot price jumped up a little bit, but it didn't have the major impact that it would have had benzene prices not be doing what they're doing right now. On the production side, our production's been pretty steady since the beginning of 2013, but the key is the inventory levels. So we are consuming and exporting most of our production. That low inventory level keeps us very, very vulnerable. So anytime we have these planned or unplanned outages, it provides more leverage for producers to raise the prices. Right now, Styrolution still has a plant down that should be coming up at the end of the month. But this one's the most interesting one, is Westlake's. Westlake is a planned outage, but it's been down for over 2 months. It should have already been up. They're choosing to keep that plant down for economical purposes. As you can see, the prices are starting to erode. They're in no hurry to bring that asset back up. They want to keep the market tight. Real quick, going back, on the styrene right now, spot prices are around 66.5 cents. They had a little spike up to 70, but we dropped back down. The contract price has not settled yet, but October is projected to drop almost 6 cents, and it's being driven by what the benzene price is doing. The benzene contract price today is at $4.22. They're projecting that could possibly sell at $3.85. So there's still going to be some downward pressure on the styrene monomer. Butadiene is the other key component. Butadiene is also known as C4, and basically it's a byproduct. You get this when you go the olefin route, and you get this by going with the refiner cat cracker. Now, you don't get as much from the light feeds as you do from the refinery cat cracker, which is one of the reasons why we watch the refinery rates, because it will have a bigger impact. Now, the drivers for butadiene, one of the key ones is imports. We import a lot of butadiene, and the imports help drive our butadiene price down. The other key ones is rubber. 75% of butadiene goes into rubber. So your tires, your natural rubber pricing, your demand there, that plays a very key role in what happens with the butadiene. Right now, butadiene prices are really eroding. We're at spot prices of around 40 cents. The forward bids and offers are still around that level. Everyone thought when we hit the 55-ish range that we were at the bottom. We're still not at the bottom. Contract prices have not settled yet, and this has changed a little bit. There's been more nominations as of today. We've got Exxon and Lyondell have nominated both down 6. TPC has nominated down 10, and Shell has nominated down 8. So that can put our contract price between 44 cents and 54 cents. We haven't been in those levels in several years. So it's a very good time for the polystyrene market based on these two feedstocks. The butadiene production, same situation as styrene monomer. We produce, and it's pretty steady, but we consume a lot of what we're producing. So again, we are vulnerable. The one good thing about the current market today is you can see on the inventory level, it's a little bit up there. It's almost as good as what it was in the beginning of 2013. Right now it's considered full. Our tanks are full. There's not a lot of transactions happening. Nobody's wanting to buy or do anything with butadiene. The tire market, that market's way down. The demand's way down. And the other thing that's been pushing down the butadiene price is the SBR market, the styrene butadiene rubber. Those producers were worried that we were going to be inundated with imports, so they were really making a conscious effort to get the butadiene price down and stop those imports. So the tire market, and the crude oil and the refineries, that's really been all what's pushing our prices down here. Jumping into polystyrene, supply and demand had it played a really big role, more so in 2013. In 2013, we had some pretty significant price increases, and what was significant about it was in the off-peak season. The prices really started running up even before we hit the peak season. And you can see the yellow line, the total sales outpaced total production. So we were selling more than what we were producing technically. So demand was very high. Prices went up pretty significantly. Recently though, demand has been way down, and that's twofold. One, it's off-season right now, but two, they've been seeing the benzene markets in September, the oil going down, the benzene going down. So there's a perception that prices should be going down. Now, it is going down, and it does follow benzene, but I want to make a point to say it doesn't follow it on a one-to-one basis. And I'll explain that here in a second. This is the price trend. You can see that it did follow benzene, but not one-to-one, meaning benzene might have gone up 3, but your polystyrene price might have gone up 5. Benzene might have dropped 5, or the raw material cost dropped 5, but you might have only dropped 2. So they didn't do a one-for-one. Now, there's a standard rule too when you talk about polystyrene and benzene and how they relate to one another. If you take 10 cents a gallon of benzene, it will correlate into about 1 cent a pound of polystyrene. In the next chart, I'll show you how that is pretty significant. Recently, that little spike you see up there in July, What drove that was $5.28 a contract price for benzene back in July. What drove that up was not just oil, but it was a Shell unit in the Netherlands that went down, and it would stay down for a long period of time. That sent prices in Europe and Asia of benzene at record levels. So other regions will impact our price. Those regional prices are also coming off following the oil, as well as we are coming down as well. The benzene contract price right now is projected to possibly settle at the 3.85 cent range. So we went from a peak of 5.28 down to 3.85. So it's a pretty big drop. Right now on the table is Styrolution has a 2-cent decrease, but Amsty and Total and Styrolution has a 2 cent. Amsty is at 4. The last 3 months have been very quirky about how the polystyrene moved, because in August, Amsty put out a price increase of 5 cents, and there were such sneaky little buggers because they know that they could see the benzene was going to drop, and it did. What they did is they put out that 5, and if you didn't take it, they came to you and said, that was your decrease. So they really played that one well. The other kind of strange thing that happened was the IHS index posted up 0.008. Okay, how do you get 0.008? Well, they said they took the 5-cent increase from Amsty, which represented a third of the market, and their volume equated that to 0.008. Okay, let's jump to September. September, Styrolution and Total went down 4. Amsty, only 2. IHS reported 4 down. They didn't use the same methodology of the 1/3 of the market. So that's why in October, you only see Styrolution and Total down 2 and Amsty down 4. They're coming into balance. Now this is the very interesting slide, because here's what's been happening. I mentioned earlier about the 10% change. They have not been moving your price in conjunction with the raw materials. The very beginning of the year, like I said earlier, if benzene dropped 50 cents, that should really correlate to 5 cents polystyrene. It didn't happen. If it went down 5, you only went down 3. If it went up 10, you might have went up 12. There was only one time they kind of caught themselves, and that was in July. They came out with price increases of 7 cents for polystyrene. They jumped the gun a little bit. Benzene had really jumped up to correlate to 9-cent increase. So they kind of left 2 out there, and they weren't happy about it. So come August, when benzene dropped that 2, you didn't see a price concession. They got it back. Now, we should really see anywhere from 11 to 13 cent raw material cost erosion. So far, you've only seen 6 with the October go through of price concessions on polystyrene. So the bottom line is they've increased their margins. There's still opportunity out there on the polystyrene side. Now, it's not going to be easy, because I can tell you there's been a lot of pressure on these guys from corporate to say, look at the PE margins. We need to do that. So that has become a very big problem lately, is these other resins trying to match what's happening with polyethylene. Yet these prices are at record prices, and it's a very dangerous game for them to play, because once those other resins start coming off, you can substitute a lot of polystyrene for polypropylene. We're seeing that now with Dunkin' Donuts and this new development of polypropylene to replace polystyrene cups. Now, before I jump into that, real quick, going forward on polystyrene, if I can give you one piece of advice over the next 90 days or so, don't be in a hurry to replenish your inventories. Just as much as your business can withstand, just in time, as much as you possibly can. There's little risk that your price is going to go up, but there's a greater risk, higher probability that prices will still come off. So you don't want to be sitting on high-priced resin. So evaluate your business, evaluate your inventory positions, but just as much as you can, Just buy as little as you can without disrupting your business flow. Mark, do you have anything you want to add to that? Does anybody have any questions on that segment of it? And then I'll be around. You can ask me any more questions later. I'm going to jump into the nylon portion of it now. And in nylon, not only is benzene a very important component, but caprolactam is probably just as big. And the reason why is you get caprolactam starts with the benzene. And those two, benzene and caprolactam, are going to be your biggest contributors to how your nylon price is going to move. Also, supply and demand is very key. And supply and demand has actually been the best thing that has happened to the nylon market within the last 18 months or so. And I'll explain a little bit why. North America exports was a big thing for North America. Back in 2010, we would flake and export most of our caprolactam. Honeywell, 60% of their business was exporting caprolactam because Asia was just absorbing it all. The other key thing that happened in 2010, and this is where, when Sam was talking about drivers and not just keen on one thing, this is a driver no one would have even thought would have been a factor. But the cotton industry, the fields in Pakistan and Asia, flooded. They got wiped out. That cotton demand moved to nylon. So nylon prices during that time jumped over 56% because the cotton fields got flooded out. And caprolactam prices hit record highs of $3,300 a metric ton. So there's a lot of different factors that can go into impacting your polymer prices. During that time, China made a decision. They said, we've got a 5-year plan. We are going to protect our industry here, and we're going to be self-sufficient on caprolactam. So they started putting together assets, building new plants, and so forth. We are, in 2015, will be their 5 years. They will be self-sufficient. We are already seeing that. They have dropped in 2013 caprolactam imports by 41%. That's huge for the North American market. Because remember, Honeywell exports 60% of their capro. They're not exporting 60%. They got to make a pellet. That goes into the inventory. That goes into better supply in North America. I touched on these a little bit with the benzene. You can see on the bottom that the benzene does move with the caprolactam price. But the key to this whole slide is the top graph up there, the supply and demand. Supply for the last 18 months has been outpacing demand, and that's not going to change. There's a lot of new capacity for caprol and polyamide coming on board, and the demand is very weak in Europe. And Europe is getting pressured from Eastern material now as well, which was never an issue. So your polyamide market is going to be in a very, very good position for at least several more years because supply is outpacing demand. Now, the reason why that's so critical is because in 2013, the one thing that was driving prices down more than even benzene and caprolactam was the fact that there was so much supply, there were new assets coming online, they wanted to sell those assets out, so they were going to the market and they were undercutting each other's price. It was, talk about the supermarket that Platts put up earlier, it was a supermarket for polyamides because these guys, the producers, were more worried about, I want market share, I'm not going to worry about the price because I need to sell some of these assets out. It was a very good time, and prices came down exceptionally during that time period. Now, just briefly on the nylon, again, I mentioned supply is outweighing demand, and the lack of caprolactams is putting us in a very good position, and prices have been sacrificed. Going forward, on nylon 6, very similar to polystyrene. If you don't have to buy, don't buy. Because with this new capacity, and DSM has got a new line coming online in 2016, it's in 2016, but they're already out there lowering prices and making deals to gain market share. Because they know if they don't get it now, and it's going to be much more difficult for them to gain that later. So right now, at least for the next 90 days, the same as polystyrene, if you don't have to buy, don't buy. If you have to buy, then really shop around if you have more than one qualified supplier and get your best price, because they're willing to talk. So don't be in a hurry to replenish. Just watch, wait, and take advantage of when the market continues to erode. You don't want to be sitting on high-priced inventory. Again, you see the cost trend here. We are definitely in a down market. Again, they're willing to, talk to you. It's not about, price. It was in July when benzene did hit 528. Benzene now dropping the way it is. Their raw material costs are going down, and they want market share. That's the key, is they want market share. So if you were an index-based price person throughout the year, you either saw flat to slightly up. If you were formula-based price, you would have seen some fluctuations because you would have moved with the feeds. You would have went up and down with benzene. And if your formula was tied to caprolactam, you would have went up and down based on those two feedstocks. Just a real quick recap on the world producers. You could see 37% is in China, and that's going to grow. When all of the two new lines just came up in Taiwan and India, and there's more coming online. The big ones in North America you might have heard of: BASF, DSM, and Honeywell. Those are your big three. And if you can, my recommendation for you today is qualify all three, if you don't already. That's going to be your best bet going forward. These guys, like I said, DSM has new capacity. It's 110 million pounds. It's high viscosity for their nylon 6, the Acculon, coming online. And we're just going to be in such a good position of oversupply versus demand. So the better position you are, competitively wise, with your suppliers, is going to shift the leverage to your side versus their side. That kind of concludes my portion of the nylon 6. I'm going to turn it back over to Mark, who's going to talk to you about nylon 6X. If you have any questions at the end, I'll be right here.
Great. Thanks, Robin. I should note, too, that I'm from New York as well, but I'm on the Toronto end of the state, not the Brooklyn end of the state. So, to continue with nylon 6,6, certainly nylon 6 as a key fibers and films resin is a commodity, the commodity nylon. Historically, 6,6 has had a much greater presence in the United States, largely due to the efforts over the years of DuPont in their development of their materials and compounds, as well as specification activities. Certainly, the market changed about 10 years ago when Koch Industries bought up the fibers business from DuPont, as well as their intermediates business, and then were able 5 years later, under agreement with DuPont, to enter the engineering resin space. It's been a rough road for them in terms of developing the grades and getting the specs, but they have made progress into the industry. The other aspect of the market that changed quite dramatically during the recession was the fact that we had a business that was extremely service-oriented with a lot of made-to-inventory products. That has changed considerably since that time, and we are very much in a lead-time-oriented, made-to-order type of business, something that was reflected in an earlier presentation about the olefins markets. But certainly the recovery from the recession, the fact that we've had a very good automotive industry this year, and the lightweighting efforts to improve fuel mileage is helping a great deal in the demand side for nylon 6,6. And although the numbers of producers are maybe not as robust, it is a heavily compounded family of resins, and therefore the compounding family of companies continues to grow with new entrants into the U.S. from overseas, as well as expanded capacity. When we look at the feedstock development for nylon 6,6, we have two principal processes to achieve nylon 6,6. The first is, and the most dominant, is using butadiene and benzene as the feedstocks. Invista is a big part of the production of the intermediates from that process. The trend line in red that I have on this graph is tracking the butadiene. We've seen that rather large reduction in terms of butadiene pricing over the last 3 years, which has substantially lowered the cost of producing nylon 6,6 using the DuPont and Vista process. The other side of the coin is the process using propylene, which via acrylonitrile, which is what Ascend is tasked with doing. And they've had to deal not only with the volatility in benzene, but also the volatility in propylene. So their cost picture has not been nearly as good as that from the other side of the equation, but they nevertheless need to compete. We are looking at development, investment in nylon 6,6. Not so much in large quantities of additional capacity, although there is capacity addition going on in Asia, but there's also been investment in terms of the intermediates and improving the process and reducing the amount of resources, energy, and feedstock to produce the nylon intermediate. So that's been an Invista initiative, now installed in their plants in Texas and to be installed in their new plants in China. I have a list of the major resin producers there, and certainly there's a whole universe of compounders. So there is a very active and healthy market out there for suppliers in the nylon compound space. End use across nylon, both 6,6 and 6, you can see is heavily dominated by fiber at 60%. And on a global scale, 6 is the primary resin used offshore for engineering applications. And as a result, you have seen some efforts to move more 6 into engineering applications in the U.S., although that is something that takes a great deal of time as specifications and designs have a rather long shelf life. The outlook for nylon is certainly very good in the U.S. at this point in time. And again, I referenced the automotive market, which has seen an increase in vehicle production above the 16 million mark and approaching the 17 million unit mark. So we're seeing a very robust demand in terms of automotive and increasing content on a per unit or per car basis in terms of thermoplastic, and in particular nylon 6,6, which has very good application, particularly in the underhood area. Raw material growth or costs will be influenced by global GDP, and in particular tire demand, as Robin mentioned, for butadiene, so we do need to keep an eye on that. And that's less to do with new car production. It's about replacement tires. We also have to keep an eye on natural rubber prices, since that can easily be substituted for some of that butadiene demand. Feedstock output in the U.S. with the light feeds has reduced some of the output of butadiene, so that has to be considered, and we are taking more imports now. This butadiene had tended not to be as actively traded on a global basis historically, but has been traded more actively in recent years as production increases have occurred in Asia, and Europe, due to stagnation of economy, has had extra to sell. Overall, we're looking at a marketplace that has seen a reduction in the cost of raw materials from a year ago of about 3 to 4 cents per pound. And that will be the key point in discussions and negotiations going into price negotiations for pricing at the first of the year. So we do see opportunity there. The margins have been improved and will be substantially improved, as you will hear a little bit later, by reductions in propylene that will improve the bottom line for Ascend. So I think I am sticking with your theme, Robin. Keep light on the orders, try to maintain the minimum inventories, and look for the discussions with your providers about price reductions based on raw material costs. And if you can incorporate some of the new players, the growth players in compounding into your mix, that will also serve to help with your overall competitive position. Moving on into ABS, this is, as I mentioned earlier, perhaps the more complicated of the 3 engineered materials we'll talk about today, in the sense that It takes in styrene monomer, it takes in acrylonitrile from propylene, and it takes in the butadiene from the crackers or the refineries. As a result, each lends itself to a particular aspect of the qualities of ABS, but ABS as a material has not seen the growth of some of the other materials in the resin markets, and as a result has significant overcapacity both here and in Asia, and as a result we've seen some consolidation in the industry. Certainly, Asian investment in ABS production was based on stronger growth than they're currently experiencing, and there's even a very significant plant in Taiwan that has yet to be started because of a lack of demand. ABS prices are now benefiting from the lower cost of oil and feedstocks in that region, and we see prices starting to fall. The reason I mentioned Asia so frequently is that it is a very significant factor in competition in the U.S., as there is a very active and growing import market. Overall, demand has been in decline in the past decade. It's seen substitution from products like polystyrene and polypropylene, although polystyrene in its recent escalation has sometimes exceeded what you can get in terms of imported ABS, but we also have smaller footprints in terms of the kinds of electronic enclosures that we used to have, and a lot of that has moved overseas. Certainly we've seen some stabilization in demand based on application into automotive. Appliance has improved a bit, and we're seeing improving demand to construction as the housing market has seen some improvement here. When you look at the overall ABS raw material cost, you can see that it's trended down, but on a gradual level. That's what I have the red trend line for, and you can see that we're kind of ending the year on a quarterly average basis pretty much where we ended the year last year. However, when you look at the December outlook for feedstocks, we will be on the order of 3 to 4 cents lower than we were in December of last year from a raw material cost perspective. We're already seeing the market soften on that expectation, and we are also seeing ABS prices for Asian imports coming in lower. So as a result, again, the same rule applies. Keep those inventories low and look for better pricing, and if you can, introduce Asian competition into your mix, because it is a critical competitive factor for that market. We expect that prices will decrease into Q1. The one exception is a smaller portion of the feedstock slate, which is ammonia, which is currently up a bit on fall crop applications. But we do expect that the overall cost of raw materials will be lower. In terms of consolidation of the industry, I did want to mention too that SABIC has closed some facilities, Old Borg Warner facilities in West Virginia, and BASF has elected to sell their share of the Styrolution business to INEOS, which basically says that that independent INEOS ABS plant will now be rolled into the Styrolution business once that deal is completed. Lastly, I'm going to address polycarbonate, driven largely by benzene and propylene through a couple of intermediate phases. You might hear acetone indicated as a stand-in for feedstocks here, as well as phenol. Phenol is generally priced off benzene, and acetone sees a strong relationship with propylene. So most of the discussion will relate to benzene and propylene. But we do have, it's a very tight process in the sense that cumene to phenol is generally co-located on the same site. And the process for making phenol results in 2/3 phenol and 1/3 acetone. Acetone is then returned to the process to make bisphenol A, which is the last step before polycarbonate. We are seeing global growth in terms of capacity. The vast majority of it is in China, although the most recent world-scale addition was in the Middle East by SABIC. And they also have plans to build into China as well. We also have had a little bit of industry consolidation with the closure of the Styron, Trinseo, Dow polycarbonate plant in Texas as of the middle of this year, with the intent to bulldoze it by the end of the year. That removes on the order of 10% from the U.S. market. Operating rates here were typically closer or just under 80%, and this will take operating rates up to the upper 80s. So obviously some change in dynamics in terms of supply. Changes in PC demand are also important to note, and that is that the market had a very significant chunk of its business on the order of 20 to 25% devoted to optical media. That market is, as we all know, very mature now and declining. Everybody's streaming what they need, not buying the discs. So we've seen that market decline to around the 14% level. The market is still looking for that next big application. Automotive glazing is been researched and under development for some 15 years. They're getting some applications to the side windows and also moonroofs, rear windows, but the big win would be to get into the windshields, and that's not there yet. But with the drive for improved gas mileage, we are continuing to see strong effort in that area. So PC capacity was built with the intent to get 6 to 8% in terms of average growth. In reality, it's less than 4%. Asian regions will see something a bit above that. North America and Europe will be less. But more than half the global demand does reside in Asia, so that's why all the new plants are being built there. We've, in addition to optical media demand erosion, the erosion in food and beverage has also been a factor of the market based on the BPA controversy. So we can expect that a more competitive pricing environment exists, certainly with all the excess capacity in Europe, but tempered by the fact that we've had a capacity reduction in the U.S. From a raw material perspective, we've had our up and downs along the way on the top line with a slight upward trend in the trend line, but you can also see that as of the end of this year, we're getting to a low point on that graph. And what we have is basically the quarterly average, because of higher pricing at the beginning of the quarter, will end the quarter at about a nickel down in terms of raw material cost. So there is some opportunity for discussion with the polycarbonate producers as well. As I said, a little bit tempered by the fact that Styron is not producing in the U.S. anymore, but they are importing to the U.S. And we've had more active interest from the Asian producers as well, you know, looking around to find business where buyers of polycarbonate may be dissatisfied with the fact that Styron has left the market from a producer perspective. So we are definitely in a position to have some discussions and look for pricing concessions going into the new year. So based on that, I think I'm largely concluded and reached the end of our presentation on engineered materials, and would ask if there's any questions for either Robin or I. Okay. Sam?